Okay, then welcome to our second AIP live special. My name is Teresa Blissing. I'm the founder of the Asia InsurTech Podcast. And in these times of current global pandemic, we have decided to run these live specials and talk about what is happening currently and give our audience the option to ask questions on our Facebook live chat. So yeah, very excited for the second live special we are doing here. Today we are talking about investment in times of COVID-19. Are we seeing a change in investment appetite? Are companies investing still into startups? We just have seen a couple of very impressive raises from our friends at Axinan, now Iglo, as well as Koala. So quite curious to see what the investors have to say we have today on this panel. Obviously, again, sponsored by our friends from Appman, and the one and only Michael Waits will be the moderator. Michael, over to you.
Thank you, Teresa. So I'd like to welcome and introduce everybody, all our four panelists this evening. We're joined by Naranpat Thitipattakul, an investment manager at 500 Startups, Chang, the director of InsurTech, a plug and play in Japan, Shwetank Verma, a co-founder and general partner of Leo Capital, and Alvin Cahyadi, a senior investment associate at AC Venture. Thank you all for coming and doing this. Let's just jump right in. I want to point out, and we kind of talked about this offline a little bit. Today, it's Monday, May 4th, 2020. And I've been, I wouldn't even say self-quarantining, but I've been sheltering in place for almost 7 weeks. This is the beginning of my 7th week. And I literally still only go out for food and for beverage. Is everybody, Pat, I want to start with you. We live in the same town. Is everybody still doing some level of sheltering in place and quarantining? Let's just start with you.
Yeah. I've been staying at home for like quite a while now, and what I can see is that people are changing their behavior. A lot of people are too afraid to go out, so they just order via Grab and order stuff online from Lazada and Shopee. So even the people who never considered using these online platforms before, at the times like this, they're too scared to go out. So I see a change in behavior here. It's getting quite interesting, like because like when my mom came up to me and asked how to use Grab, it was kind of a shocking moment for me.
Right. Shwetank, how about you? You're in Singapore. We know that they had rules there as well, but are those rules getting loosening? And have you been at home for a while? It looks like
yeah, so Singapore went into lockdown on the 7th of April. I know that. Okay. Can you hear me?
Yeah, go ahead.
Yeah, saying we went into lockdown on the 7th of April, so coming up to a month, and they're starting to loosen the rules from the 12th of May, which is not a moment too soon. And I agree with Pat. I think for me, the biggest sort of notice was the change in my own behavior, how much I stopped eating out, how much I started eating at home, being more healthy. It's been a great month. I actually enjoyed not having the option of going out and having to make food at home, but I'm ready to go out again.
Yeah, I think I'm getting a little bit, I used to say like, oh, I'm not really going that crazy, but at the beginning of the 7th week, I'm feeling like getting a little bit edgy. Chang, how about you? Yeah. What's it like in Tokyo?
Yeah, so actually I live in Shibuya, which is the most crowded place in Tokyo. And now I still go out to take a walk or take a running sometimes. Oh, wow. And what I say is the population at Shibuya is probably like 1/20 of the regular time. So like,
oh, really?
5%. Yes.
Yeah, wow.
Yes. And so Japan government has been asking people to stay at home until May 6th and extended that to the end of May. So now we have Golden Week, which is about 1 week holiday, but the government is asking everyone to just stay at home instead of going outside to have fun with friends. And for me, because I'm a foreigner in Japan, so which is really inconvenient now is Japan is asking like foreigners stop coming in, like except you have some really emergency issues. So for me, if I go back to China or go to some other countries, I cannot come back to Tokyo. So which is really kind of yeah, a lot of pressure.
It feels like it. Yeah, I mean, I'm also a foreigner in Thailand as well, right? So for me, the travel restrictions and the in-house restrictions, I don't feel uncomfortable, but I just feel like it's just difficult being a foreigner in any country right now. Any
Yes.
country, yeah. It's not just Thailand, it's not just Japan, it's not just Singapore, it's not just India, it's everywhere, right? Anyway, Alvin, how about you? Are you still at home as well?
Yep, I think same case here. Actually, I've been working from home since like 15th of March. So this is like 1.5 months done.
Yeah.
And I think if anything, the government is just like becoming more strict with the social distancing restrictions, right? Like in Indonesia, I think I mentioned briefly offline, like we usually went, I mean, like a lot of people going back to the hometowns during Lebaran, but this year I don't think like government allows any of these people to basically mobilize themselves outside Jakarta. And yeah, it's been like a lot of also like a lot of protests from the communities, but I think this is the best for us. Also business, I mean, I have seen a lot of restaurants. Restaurants are all closed down right now, but also what's interesting for me on the tech perspective is that some of these restaurants are actually adopting to like a new way of selling their stuffs, right? Like, for instance, so usually we do like online delivery, like GoFood and GrabFood for online platforms. Right. But then like what we realize is at time of this, like margin is very important, and GoFood and GrabFood essentially they take like 20% of the sales as their commissions. So some of the restaurants started to like build their own technology to do delivery. I mean, like to take the orders and do the delivery themselves to avoid that 20% commissions. I think that's sort of like showing the adaptability of the businesses in Indonesia these days.
I want to get back to food delivery kind of at the end of this conversation. So I want everyone to think about this while we're talking. But Shwetank, I want to start with you and kind of jump into the main topic. Just ask a general question and then build from there. What do you think the impact is? And Teresa mentioned this at the beginning, so stole a little bit of my thunder, right? Kuala announced a $13.5 million raise, and Occidental Igloo also announced the closing of what they called their A+ round, right? But if you go back and look at the news, all this started back in October, before there was any inkling that this stuff was going to go on, right? But I wanted to talk a little bit about going forward. What do you think the impact is going to be on InsurTech investment going forward? Can I start with you?
Yeah, sure. I love crystal ball gazing. You know what they say, prediction is hard, especially about the future. So,
okay.
With that caveat, I think look, the near-term impact is sort of super easy to predict. This quarter, investments will come down. They came down last quarter. This quarter they'll come down, sort of say 50% reduction in investments. So if you're a sort of early stage startup looking to raise money in this quarter, it's terrible news. It's going to be difficult, and the reason is very simple. If you think about it from a venture capitalist point of view, the question, you have two reasons to do a deal. You either have super high conviction. You are like, I have to be part of this journey. This company is just too exciting. Or you have FOMO, fear of missing out, right? So these are the two, people may say different things, but these are the two sort of large motivators that drive deals getting done. But FOMO has gone away. Most venture capitalists feel comfortable that if they miss a company this quarter, it'll be around next quarter. And hence, the pressure doing a deal is then just that they have to feel the conviction level has to be very, very high. And it's hard to get to very high conviction levels because there's just so much uncertainty about the world. So we do not know. I mean, venture capital is a long-term sort of profession, right? So there's 10 years, let's say there's 10 years that you've got to think about before you need to exit the investment. There's no way you know what's going to happen, but you can imagine that the economy will come back, and at least it won't be like, it won't, I mean, if you do this for a living, you have to imagine that the economy will come back to some level and that it won't be complete doomsday. Otherwise, we might as well all quit our jobs. So I think all of us are open to sort of ideas and opportunities. I think all of us are very circumspect at the moment. We know that the next quarter or two are going to be difficult. And so I think from a startup perspective, these are going to be hard to get done in the next quarter or two. But the ones that are strong startups will see traction even now. And that's more for early stage ones. The later stage startups, I think, is more complicated because that's more of you already have something and COVID has affected your business in some shape or form.
Yeah.
And there I think you're going to see some significant valuation reductions. So I think you're going to see some very interesting deal structures come up there, which tank valuations from where they were in sort of last quarter of 2019 when everybody's flying high.
Can I just jump in for a second? You make a really good point, and this was a question I wanted to ask, and this is fair for anybody to answer, right? Maybe Chang, you can start with this, but a down round has in the past generally been fatal for a startup. But even a down round from an expected round, right? In other words, if you were expecting to raise at a $20 million valuation and you end up raising at an $11 million valuation, raising your next round has always been more difficult. So what do you think the impact of this is going to be? And it's not so much crystal ballish for me, although I appreciate the humor. For me, it's more like if you're looking at a company in January or in February or at the beginning of March, before the lockdown took place, and you had high conviction, right? Maybe you still think it's going to be great, but money or capital is oxygen for startups. And if you say, well, I'm just going to wait, this is more for early stage than for later stage, but even for later stage, we saw, WeWork needed oxygen as well. And that oxygen turned into an $8 billion piece of oxygen, but it's not so different for late stage than for early stage. What do you do for the companies where you have high conviction, but other people back out? What do you think what do you think the impact of that's going to be? I'll start with you, Chang.
Yes. So what we've been saying, especially if we're mostly supporting early stage startups, and some of our portfolios are looking for a next round of funding raise, and
right.
which are really facing some difficult times because their business plan has been behind with their plan because of COVID-19.
Yeah, for sure.
And so some of the conversation they're having with other venture capitals, maybe under a DD, but then they will come back to say, so now your business is behind your plan. We really cannot make the decision now, or maybe the valuation is too high at this point. So we're at one side, we're working very closely now with startups to see what we can support them in terms of business side, and then we're trying to make this network of VCs to see how we can support them from capital side. So what we say is amazing is we see a lot of startups are moving very fast to adopt the COVID-19. So for example, I think there's one Japanese insurtech startup you are pretty familiar with is Just In Case. They've been developed and launched the insurance for COVID-19 in just 1 month.
Yeah, I saw that.
So I think what connected to Verma's comments, what really important is we have to see which startups can survive under COVID-19, which can adapt for this environment to make some really quick twist to their business. And that's probably some VCs are also thinking about the investment, but they need to see this for 2 or 3 months to see if that's really a good deal.
Okay, this is a good segue into, we have a question from one of the listeners, Timo Ustal, who's the founder of a health tech called NurseBeam. Pat, maybe you can help with this one. He wants to know then, in the context of all of this, like we said, oxygen is necessary for these companies. What should a startup do to approach investors, right? When this FOMO's gone, so there's no more fear of missing out because there are very few people making investments, let's say, but what should a startup do when they're approaching you? It's a great question.
Are you talking about
Yeah, go ahead, Pat.
Oh yeah, are you talking about approaching investor right now?
Yeah, right now. In other words, what can they do? Because again, we talked about this before. It generally takes 6 months to close anyway. So you don't want to be in a situation where you're just not having any conversations.
Yeah, for us, because we invest in early stage companies, sometimes we can make decisions as fast as 2 weeks. Like it can range from like 2 weeks to 6 months, depending on the startup. So right now, in general, I would have to say that the investors are becoming more cautious. So I don't really recommend to fundraise at the moment, but it's good to spend time to get to know investor, get their input, and maybe like develop your network, try to get connected to as many VC as possible. And now is the best time for you to kind of like present your idea, get them to know you, and then just kind of like factor in that their input. Like if there's any concern that they have about your business, now you still have some time to kind of like adapt your model, right? So, but I wouldn't recommend to fundraise at the moment if it's if you still have some runway left, but you can spend time to get to know investors. And the way that you approach investors, it can be like, I think investors are quite open to talk at this moment. Like we are not investing very actively, but we are open for discussion. So like, for example, like if anyone approached me during this time, I actually have more time to review that deck comparing to last year. So, and I would be happy to talk to startups to kind of like, if my advice can help them, then I would be happy to talk and share and discuss. So in my opinion, it's a good time to approach investors, but maybe not for fundraising, but just to get them to know you and get input.
Right. So I think go ahead. Yeah, go ahead, please.
Yeah, briefly. I think the crisis is actually a very interesting time as well, when a lot of investors are a bit more forgiving. So the way to think about this, what I did with my startup in the last crisis in 2008, was that I actually negotiated with my investors to do a down round because we needed the money,
right?
But for them not to exercise their ratchet rights. And you can do that, and investors realize that this is not your fault. It's not sort of your.
So can you explain, just for people that may not know, can you explain what that means? The ratchet rights.
Oh, sure. Jargon. Apologies for that.
Not at all.
So when you take a venture capital investment, you do it at a certain valuation. And the venture capitalists typically demand that if you raise another round later on at a lower valuation, their shares get priced at the lower valuation or some weighted average thereof. These things can be all negotiated, but the harshest is that they get repriced at the lowest round. So you as a founder can be diluted completely to nothingness. Now, as a founder, though, that is in your control. So no VC wants to see the founders diluted to zero, because then you have no skin in the game. You don't want to build a business. And ultimately, as VCs, we are backing you to build the business.
Right.
So that's a great tool you have in your armory to say, look, we need the money. It's going to be a down round, and you're not going to exercise your ratchet rights. And you're not going to exercise all the protective provisions that you have in the shareholding agreement, because otherwise we shut down. And the best investors will agree to that and say, okay, fine, appreciate that. This has happened, and let's go and see what the market prices you now. So that's one way to create at least interest in the investor community. The fastest way to lose a conversation is to say, hey, my last round was at X, and this has to be 50% above X. In today's environment, that's a no-brainer. That's the conversation's over. The second way to create FOMO as a founder is deal structuring, right? I mean, you have certain tools in your hand, so be creative. So simple things to do is obviously try and do a convertible round at the moment with a significant discount to the next round. So I'm seeing in the market today 30, 40, 50% discounts to the next round.
Which is normally 20, 25. Let's just make the distinction,
yeah. Normally it's 15 to 20. 20 is normal, what would see in good times. But in sort of, you're seeing even good businesses offer discounts now. The other thing I'm seeing that people are being creative about are liquidation preferences. Now again, it's a jargon term. Liquidation preference basically means who gets paid first.
Right.
And so typically, who gets paid first? So typically, it's your VCs get paid first, but they get an option. They get either their money back, or they can convert into shares and get the shareholding equivalent of your exit. But some people are offering sort of 2 times or 3 times multiples now. I don't like it. I think liquidation preference stacking is a very, very dangerous game to play, but people are doing.
I understand. So
I just want to add on that, actually.
Yeah, go ahead.
Sorry.
Please.
So if the question is how to fundraise, how to best position my startup during this time, right? If I relate to fundraise. So, I mean, I sort of agree, like this is not a good time for fundraising, especially after, I mean, like before COVID, the investors are scrutinizing offer WeWork, Ploton, and all of those like failed IPOs, right?
Yep.
And so fundraising right now is typically very, very tough, but also very, very expensive for the founders because investors would push down the valuations. They started to do like a public market comps and all that. So my advice is, if possible, just stretch your runway by cost cutting. But should you really need to fundraise if the conditions doesn't give you an option to not fundraise? I think the main thing that you can do is come to the investors. If you're asking them money, you have to show them like, how are you going to use the money? Because if you only use the money for, I mean, let's say you're raising a bridge round and you only use that so that you can survive until COVID, that's not gonna make the investors interested. What you have to show is a business plan whereby, okay, I'm gonna outlive all of my competitors, and by that time I will already have a robust product that I can be ready for growth after the COVID-19 is sort of like subdued, right? So essentially, first thing is answer to yourself like, okay, I'm raising money for a bridge, but bridge to what, right? Because a bridge can be a bridge to like profitability, a bridge to improve products, a bridge to market dominations. But please always have in mind like what kind of bridge that you need. Yeah.
So one of the things I was thinking when, and again, this is just me putting on my investor hat, but also my business dev hat, and anybody can answer this, right, is as soon as COVID-19 comes out, if you're operating in the InsurTech space, like it's in the name, you're in the insurance space, you're trying to use technology to increase penetration in the insurance space, we know, because we live here, that penetration is really low anyway. And we're always looking, I'll use the we royally, but we're always looking for some way to increase that penetration. It would seem to me that something like this, where you could sell good insurance coverage for COVID-19, which I think Chang, you said, just in case came out with this in 2 weeks, a bunch of companies across the board did. And then by using digital distribution, and if you listen to people talk about this sort of acceleration of digital distribution in the region, wouldn't this be good for some insurtechs? I mean, shouldn't this be like a catalyst to invest in them as opposed to holding back? You can hold back a little bit, maybe if you want to get a lower val. I get that. When the market's falling, it benefits people that have money. But wouldn't you want to invest in companies that are doing that? Chang, you're shaking your head. Do you want to answer that first?
Yes. So what we see a huge opportunity in Japan now is non-face-to-face sales support solutions.
Right.
Because the insurance industry in Japan has more than 200,000 captive salespeople, and more than half of them are housewives. So the industry has been hesitating introducing any digital solution to that channel because they've been doing pretty good so far.
Right.
But currently this year, like the whole 200,000 people cannot go out to meet their clients, cannot do any sales, but still almost every insurance company has decided to pay their salary, the commission part, as same as last year of their commission. So that's a huge payment to their employees. And now actually it's a very good chance for them to introduce a supplementary channel, or at least some digital support for this current channel. So that kind of solutions we won't put too much focus until now, but this is what we see actually what COVID-19 has brought.
Right. And I want to make the point, at least in my mind, that Japan is an outlier, particularly when it comes to the larger Asia, because insurance penetration is just so much higher. Right.
Yeah.
And also the insurance companies in Japan are much more powerful, I think, than the insurance companies in other countries. But maybe, Pat, you could talk about this. So I posited that maybe this was an opportunity to increase both digital distribution, but also penetration. What do you think from a Thai perspective?
We have seen a very high growth in the industry, in the insurance industry. So like in Thailand, like there were a lot of regulations that limit the distribution and many kind of innovation in the insurance space. But during the past few months, with COVID-19, we have seen that a lot of traditional insurance companies have adapted very quickly, and they started online, and their sales is crazy. Like they could sell like billions of insurance in a day, and that's something that has changed the landscape of the industry. And we have seen that many of the traditional companies are open to work with startups and be more innovative and bring innovative products to the market. So this could be a very good opportunity for InsurTech startups to jump in as well. I think there's still a lot of opportunity here. The only thing is that, yes, it is a good time, but the startup has to prove itself too, that it can grow and it can sustain the growth even after the COVID-19. So we just want to make sure that this kind of growth is not temporary just because people are scared of COVID, so they buy insurance. But the solution has to prove, like, first, the traction has to be very strong, and then still, like, even though it's growing very quickly, we kind of still want to wait and see, like, what would happen post-COVID. Would you still be able to sell this much insurance after COVID, for example? Or like, if they can show us any kind of like future trends that will help grow their product even more.
Right. I mean, in a country...
Just to jump in there, sorry, Michael.
Please, go ahead.
I think the key difference here is between macro and micro, right? So the macro trend is completely accurate, that digital distribution of insurance is going to grow, and there's a huge penetration opportunity. But that micro trend is known to everyone. So as a startup, that gives you absolutely as a startup pitching, if you're using just that frame as a pitching frame, that's not very helpful. That's not going to get you an investment, because that holds true for the entire universe. Everyone who's pitching at the moment has that slide that COVID-19 has made a market inflection point for XYZ. So what matters really is, what is the micro? What is your unique insight, to Pat's point, as to how will you sort of stand out from the crowd? And that's the trick. That's not the easy part. You can't answer that in a broad sense that is applicable to everyone, because if it's applicable to everyone, it becomes a macro trend.
What's that aha moment? In other words, if you're looking at not just a pitch deck, right, because that's a very specific thing, but if you're having a conversation with a startup founder or a startup team and they present something to you, like, what would pique your interest today? And I guess the point I was trying to make wasn't that any specific InsurTech should benefit from COVID-19, but just as a sector more so. And I'll bring this up in a few minutes when we're done with this part of the conversation, because I want to talk a little bit about everyone's view on travel. But that was the only point that I was trying to make about that was, what is that aha moment when you see a pitch deck, you're like, okay, there's a different view. What's the different viewpoint?
It goes back to that quote, right? It's hard to define pornography, but I know it when I see it.
Okay, you get one more joke, by the way. The first two were pretty good.
This is a stand-up. I thought this is a stand-up.
It is. Yeah.
Look, I mean, I think what so jokes aside, I guess what you're looking for is for the founder to have a way of approaching and articulating the market that makes you sort of believe in it. And it's, you know, if to sort of get into it, specifics at the moment is a bit harder, but if I look back at the companies we've invested in, we will find that the founder market fit was high. And by that, I mean that they had a ability to articulate and explain the way they would build their business, which stood out from the other companies we looked at in that space, and hence made us want to back them.
Got it. Alvin, how about you?
Okay, so I think the aha moment when I see on the new business plan, right? I think it particularly comes down to like, okay, so usually a founder, they would assess the metrics on the monthly basis, but maybe during these days, they would be looking at this on the daily basis, right? So I would be keen. I would be asking the founders what's the tractions on the daily basis, and basically if they manage to find like a product fit into this in these situations, that usually becomes like the aha moment. If like there is a single like significant changes, right? Like there's a single uptick on a particular day, I would be like asking him if and if I make my thesis, that's going to be a sustainable changes. Not only sustainable during the COVID-19, but also sustainable even after the market recovers. Yeah. Then therefore I know like this is going to be the company that can do it for the long run. Yeah.
So Pat, I want to jump back to you for a second. Chang, did you want to jump in? Go ahead.
Yes, I want to add some comment. I'm very happy you mentioned that Japan is kind of outlier in the whole Asia or maybe in the whole world insurance market. But actually, a lot of like venture like startups don't understand that. So for me, it's really important if the startup understands the Japan insurance market, because if you just come in to say, oh, we have this great digital insurance product or we have this great tool, but actually it doesn't really work here, we've been saying that kind of cases a lot. So if a startup really understands this is a AI solution or a digital automation solution, but really Japanese insurance companies can use it right away, the market is really huge here, and we're really happy to invest in that. I think it's not something only under COVID-19, but something like in the long term really has a lot of market to grow. So that's what I really want to say. Like I will be amazed if I say that from a pitch deck.
But it's a really interesting point, actually, and I don't want to go away from it so quickly. So if you look at the insurance companies in Thailand, the insurance companies in Indonesia, right, that have unique challenges, right? You have to think about Sharia finance when you talk about insurance products in Indonesia. Shwetank looks at the entire region as well. I just think it's really interesting to point out some of these differences because, like you said, startups will just come in with, I have this amazing solution. We talk about it all the time here, right? Different languages, different cultures, different religions, different backgrounds, different perspectives. I also think it impacts the investment climate as well. Because if I come in with a solution that works in Indonesia, it may not work at all in Japan, again, if for no other reason than because penetration is so high and because the salespeople are different. But all these things are really important for startups to know. It's not just something we talk about, it's a reality. And I wanted to get back to sort of the investment part of it as well. So Pat, you said before you have so much more time now to analyze companies, which makes perfect sense. I mean, I think everybody does too. I have more time to do what I'm doing. I wonder why I don't get more done. But the real question is, what's it like? Most of the companies I presume you meet, and I'll start with you, Pat, but I want everyone to talk about this. You probably meet face to face at least at one point, right?
Mm-hmm.
What's different now about this dynamic of meeting on Skype or meeting on Zoom? When you, like, what's the different dynamic when you can't meet the founders face to face? There's no sort of, visceral feeling you have. Like, how does that feel?
Actually, it doesn't affect my decision or doesn't really, I don't think it has much impact on my decision or our team's decision. So basically, let me give you more information and background. Please. So basically, we're a fund based in Bangkok, but we also invest in Southeast Asia. So a lot of times we would schedule a Zoom meeting with founders in the region anyway. So we kind of like, our team is kind of like getting used to having this kind of like
fair enough
Ching session. So it's not a big change for us. And I don't think it affect the relationship building part that much. As long as the founder, it's just the pitching part that the founder has to do a little bit more work to keep us interested.
Engaged.
Yeah.
Well, the reason why I bring it up is because to me, and everybody can jump in when they want to, but to me, capital raising or these introductions are more like dating in a way, right? Where you're trying to get to like a certain goal, and nobody wants to date over Zoom. It's just very different when you're face to face or when you're electronically connected. Does anybody disagree with me? Or does anybody agree with me?
Yeah, I think I totally agree with you. I mean, it's super hard these days to basically build a trust from the founders. I mean, like to the founders, and given we cannot meet in person because. But then again, like I believe these days, even the founders that maybe you passed in the past, like you decided not to invest in the past, they might come back to you with the approach. I think for that kind of founders, it's quite easier because you've met before. So. Yeah, I do think like it's a very challenging time for us to make like a founder-based investment decisions. Because like like even though you can grill them over the Zoom session, you can ask them questions over the Zoom sessions, but sometimes it just like doesn't feel the same, right? Like you couldn't really read their body language and or all that. But maybe in the future, this is gonna be the new normal. We don't know, because even before Tinder was big, we thought like it would be impossible for us to meet like someone online and then just like commit to some extent, right? But I think it's sort of becoming the new normal. Maybe this is going to be the new normal. Yes.
Amy, do you want to jump in?
Yes, I think there is a one missing piece, which is the personal connection. If you don't meet him in person and this personal trust. So like in Japan, there's a huge culture which is like after drinking, right? If you invest in someone or you work with someone, you probably want to hang out with him with a beer, so you know him better and talk something maybe not directly related to work. But actually we do Zoom drink now. And that really helps because but I think what is important is it doesn't happen that naturally. It's not like you have a meeting and then you're like, if you have time for lunch or like a drink after this, like you have to schedule that beforehand. But I really think that effort is important to have some time to get to know this person. And of course, in person is the best, but also that could be helpful.
I mean, one of the stories that I like to tell about hiring, what was the thing, opportunity that we had at Morgan Stanley, and I think I've probably told this story to all of you at some point, was, Morgan was about to hire somebody to work on, let's just say, one of the trading desks, and they had gone through a whole process of interviewing this person. They liked this guy, they were going to hire him, they were going to offer him a job, but they took him outside the office and took him out to dinner, and then they asked him about some obscure detail on his resume. I'm sure you've all heard this, and let's just say he said he was on the swim team, and one of the guys happened to have swam in college, right? And this never would have happened in the office because it would have seemed too forced. But at dinner, they said to him, "Hey, what was your time in the, in the backstroke or the butterfly?" And the guy didn't know. Right. So that's what I mean by having that personal face-to-face connection. It's like at some point, it's hard to do that over Zoom. Right. And think about this, like after this, I'd love to go have a drink with everybody on this call, but that's just not going to happen. Right. And we almost would never, you're laughing, but we'd almost never hire somebody without taking them downstairs, taking them into Heartland and having a beer with them, because that was the way you found out who they really were. And in the end, whether it's an investment, a marriage, a date, or anything else, you really just want to work with people you like and trust. And the best way to figure that out is not to look at their pitch deck, I think, but
yes. I totally agree with that, but I think there are some still, I want to take this positively. So I think there are some things we can do. So one thing is definitely you want to invest in someone you can trust, like, so what we do is we check the mutual connections, some other like startups or VC guys to say, what's this person like?
Right.
It's not the best way, but I still believe there are something we might work on. Is just my opinion.
I think there's also some positivity to this though, Michael, because people, I agree with you, you want to work with people you like and you trust, but sometimes in environments like drinking, etc., if you don't drink, in some of these environments, some people don't shine. And I found that a Zoom call allows people to have a little bit more assertiveness than they might do in a face-to-face interaction.
Interesting.
And be a bit more sort of aggressive about pitching their business than at least I had seen in some personal face-to-face interactions. So it's been a fascinating experience. Look, I think face-to-face is better than Zoom for sure, but there are ways to make Zoom work, as Chang said. I think we've all been doing virtual drinks, and I think if what I find is that if you do plan it and actually do it, like you actually have a meal while streaming, it's 60% there, better than absolutely nothing.
The only thing you can't do is I can't pour your drink, whether it's tea or beer. I can't do that, which I think is very important in some places like Japan. Ma. Anyway, and the other thing you can't do is I can't taste your pork. You know what I mean? Like I really want to try that Chang. That's all I'm saying. So we have two, I think, interesting questions from people that are listening in. What do you think the take on travel insurance is going to look like after COVID-19? Anybody want to answer?
Yeah, sure. I think attachment rates will go through the roof. People for the next 2 years, next 2 to 3 years, it will be a top of mind purchase. So I think sort of people will be buying more, will be buying higher value products, and will be looking for products that give them comfort that if in case of any cancellation, because a bunch of things didn't have pandemic coverage, this, that, and the other. So in case of any cancellation, will refund them their money and will be willing to pay more. So it's going to be, once travel comes back, it's going to be a gala time for next 2-3 years in selling travel. But as you all know at the moment, in the overall travel space as well. But at the moment, everything has gone to zero.
But so this is
fortunately, we are investors in 2 travel businesses which both sell insurance. So I'm sort of seeing this from a deeply inside perspective. Only smiling is all that's left now.
Yeah, exactly. Pat, you were shaking your head as well. Did you want to jump in? You can say no.
Yeah, so we also invested in many travel startups. They are severely impacted, and I think it will take some time for them to recover and for people to start traveling again. And the thing about Thailand is that I think, Michael, maybe you have noticed that a lot of Thai people are trying to save money and trying to cut expenses. So I think there are a lot of opportunities, but I'm still not quite sure about the Thai market, whether people are ready to buy more travel insurance. But I'm really not sure. Yeah, just thinking about Thailand.
I want to ask a very specific question, not a general question, about digital assets as well. So if every meeting, and not every, an exaggeration, but if meetings are going to go digital, if digital assets are becoming more and more important, right? And people understand the risk, like if this call just goes down, that's bad for all of us, right? If you're in the middle of a pitch to your venture capitalist, or you're just about to close and your connection goes down, it doesn't feel good, right? Mm-hmm. Is there a sense that we can start insuring digital assets, digital connectivity and stuff like that as well? Are people more aware of those risks? Or should they be?
Yeah, that's quite interesting. Actually, I was in touch with another cybersecurity company in Thailand, and they are trying to sell cybersecurity insurance as a new business. So yeah, I think it's a very interesting area because like you see a lot of cyber attacks, especially during this period, and people are becoming more aware of it. And especially large corporations, they have a lot of, data privacy is a very big issue right now.
Right.
And like, I think it would be a new opportunity in this space.
So I'm thinking less cyber, right? Which is somebody externally trying to, do an attack on you, and more just systemic, where your connectivity just goes down. Are people interested or concerned about that?
What do you mean, the connectivities?
Yeah, like what if the internet service goes down?
Oh, I see.
Right. So I was literally in the middle of a meeting. This was now 6 weeks ago, but I was literally in the middle of a meeting. I had, 500 megabits up and down, and then it just went off.
That's really an interesting idea. I haven't seen any products yet to solve this.
Yeah, I never thought about that before too.
Yeah.
I think probably an opportunity for some parametric cover there.
Yeah.
On the basis of your speed. I think something more that telcos need to think about, I guess. But yeah, I don't think anybody's doing that kind of cover that you're thinking about, Michael, at the moment. I haven't come across anyone.
You haven't come across it. Okay. Yeah, so look, I think today's been amazing. We've covered a whole bunch of ground. Sorry, I just got a note from someone. I'm watching like 6 different technologies here. Anyway, we've covered a whole bunch of ground. I really appreciate everybody coming back and doing this. Unless anybody else has a question for the other people on the group. I just want to thank everybody for coming and doing this tonight. It was really awesome.